Hi, and welcome to episode 25 of the Wealth Amplifier podcast. What is 25? Is that silver, gold? What anniversary podcast is this for us, Aaron and Pat?
I'm going to guess silver.
I think it's silver. Yeah, I actually don't even know what you guys are talking about.
All right, fair enough. There are names, medals associated with numbers, and I'm sure some of our listeners will fact check us on that. But welcome to the 25th episode, guys.
We have the internet at our fingertips. Silver it is.
Silver it is. All right, it felt right. All right, see, Pat, you're learning something every episode.
And does that have reference to like wedding anniversaries, or like I'm like still like okay, cool?
Yeah, I think it's generally used around wedding anniversaries.
Okay.
But,
in fact, I think we sent a client of mine a silver gift for their 25th wedding anniversary, so I should know that. I did know that.
Wow, that's yeah. I think you should have known that one. Yeah, for sure.
Thank God for our excellent team who knows these things.
And before we dive into markets and financial planning, we have a few things on each today, but good end of summer for each of you?
Great end of the summer. Kids didn't want to leave vacation, which is not surprising, but yeah, everyone was happy. Good weather. Good to be back now, but the weather has continued actually. We're in the 80s here, end of September. This is nice. I can get used to this.
Yeah, there was a head fake earlier in the week, and I, for whatever reason, just never checked the forecast when I leave. So I'm wearing a sweater right now, which is not going to last when I'm out at my son's soccer game later today.
Yeah, honestly, I'm kind of excited for the shift in the fall weather. It's like my favorite time of the year. October is usually my all-time favorite month in terms of all 12 we've got each year. And the summer was good. Just watching my Giants continue their misery into the new NFL season, which has been fun. So, yeah.
Well, for the many Giant fans in my life, I think Saquon dropping what was just a routine catch so that the Eagles lost on Monday night, it feels a little bit like their Super Bowl. Even if they still like Saquon, I think this was a big moment for them. And it might not get any better than that this year than the Eagles losing on national TV while their guy drops the ball.
To be honest with you, not to get too off topic, but two things on that. I saw a funny internet meme that was like, you can take Saquon Barkley out of the Giants, but you can't take the Giants out of Saquon Barkley.
Fair enough.
But on the overarching, I was just saying this to a client who's a big Eagles fan. I'm so numb to the ineptitude of the organization that I'm spitefully rooting for Saquon, like more than anything else. Like I want him to just pound it into the Giants' face for the rest of his career because that's the numbness I have and sort of resentment I have towards the franchise at this point.
And unfortunately, I mean, it was just a fluky drop. He's been fantastic so far, but if he catches that routine ball, they'd be 2-0 now. So they're not.
Yeah.
But anyway, on to the topics at hand. So why don't we start on the markets and the Fed? We got some big news this week. Aaron, do you want to just share what the Fed did, and then maybe we'll give some commentary there?
Sure. After a long time coming, it was a big debate on when rate cuts would be coming. Would it be 25 basis points, 50 basis points? And in fact, it was the latter, 50 basis points from the Fed, and starting to now have some both positive and negative reinforcement reaction in the market. But that's the big headline for us, certainly this week.
Yeah. So, and it's interesting, I know we've been texting each other back and forth, and I've shot a few of these to my dad, but like every time there's some big market event, whether it's an economic event, a market move of some kind, all of the bulls and bears like get on social media and have a million different references to history. The last time this happened, here's what happened afterwards. And both sides are guilty of it. It's not like one, but right away there were many posts that I think the last time a rate cutting cycle started with a 50 basis point cut, it was 2000 and 2007. Not exactly wonderful times to be equity market investors. Each of those ended with 50% plus sell-offs over the next 18, 24 months. Not to be outdone, the Bulls then came back and said, I think the last time there were cuts of this magnitude, when the market was near an all-time high, I think 12 out of 12 times the market was higher a year later. And I may have butchered that quote, but I guess that's what makes a market. You're gonna have historical examples, and that's why we say, past performance doesn't guarantee future results. It doesn't. This in some ways, this time is never different. In some ways, this time is always different.
So well said, I think, on all those points. I don't know if we had even really talked about it, but it's been coming up with clients a bit this week. What are your guys' thoughts on the fact that they went 50 basis points? Because just to set the table, my own opinion was sort of pulling from a lot of financial journalists really is the Fed doesn't like to break precedent a ton. A lot of you could argue their biggest tool and their biggest benefit is being able to be predictable and communicative with markets, which was not always the case with the Fed. But a lot of journalists that I follow were talking about how a 50 basis point move really has at least historically been reserved for chaotic times or crisis communication. And it doesn't feel like we're in crisis, right? Like stocks are at all-time highs. The bond market has sort of priced in really aggressive rate cuts to some extent. The labor market is what's really been flashing a little bit of pain, which is, I think, been the big story. But things feel pretty good. So what are your guys' thoughts? Is it an overreaction? Is it them catching up to maybe a rate cycle that should have gotten started in July? What are your guys' thoughts on it? Is it good, bad, whatever?
I mean, look, I just maybe not answering directly, but when Fed Chair Powell was speaking, he seemed very optimistic and calm, and things are pretty good. And whether I agree with all that or not, I don't know. But I don't think the cutting 50 basis points automatically means okay, we're cutting this, making this big move because we really got to save the world here. I think things are good. I think that we could digest it. It'll work. Doesn't mean they have to cut 50 basis points 5 more times. They can now be data dependent, as they say, going forward. So I didn't think it was a huge deal one way or the other, whether it was 25 or 50. I think the market's happier it's 50. So if it makes everybody happy, why not 50?
Party on. I think it was Harry Truman as president who said, I need to get an economist with one hand, because he kept hearing on one hand this, on the other hand that. But that's sort of how I feel after the Fed speak. On one hand, you have, to Pat's point, a growing economy, a market near all-time highs, with inflation coming down, but not rocketing down. Maybe rocketing down is a weird metaphor, but anyway. And you're cutting 50 basis points. It just feels like, what are you doing? It feels excessive. And I know that's led to some political conspiracy theories on that, which is interesting because Powell was appointed by Trump, but the thought is Trump would not reappoint him. So I don't know how much that plays in. I would guess not much at all, but who knows?
Yeah.
But go ahead, Pat.
No, good. Keep going.
But I guess on the other hand, the way Powell framed it in the press conference, I thought had some logic behind it. Not surprisingly, he's the Fed chair. He doesn't need my approval, but essentially he described it as a return to normalcy. That essentially what they're forecasting now of 50 basis points now, 50 basis points before the end of the year, and maybe another 100 next year, would take the Fed funds rate into the mid threes. And there's a range there of high twos to low fours, depending on where things go. And that they consider that a fairly normal rate. And at the same time, on the more restrictive side, they're continuing their unwind of their balance sheet, which he described also as normalizing, even if those two things seem a little in contradiction. To me, there is a lot of logic behind, look, we're not in a time of panic. We're not in a time of despair, but we're probably more hawkish than we need to be. So let's retreat modestly rather than, waiting and then slamming the thing all the way down to zero when things really go badly. So again, two hands, I could go either way on that.
Yeah, it's a good point. I think you hit kind of all the spectrum of things that they're trying to balance. I think that's kind of how I took it too after listening to his remarks around, look, the Fed has a dual mandate, right? Just to sort of level set. Their two mandates are price controls and full employment in the U.S. economy. And they were very keyed in on the inflation piece the last 3 or 4 years for good reason. Every press conference we had for many months in a row was them being very harsh with inflation talk. And now we're starting to finally see, to your point, Matt, inflation coming down. Feels like they've made some progress there. And now we're seeing some strain in the labor market. And to me, the 50 basis point move is from that standpoint, a pretty strong signal that they are taking their other mandate just as seriously as they took inflation, which is arguably a more political one, even though they're supposed to be political. Just to tie a bow on it, I think it makes sense. Like, it makes sense for now. We'll see what happens.
And last thing on the market side, because I want to definitely leave ample time for some planning related things and tax things. But one thing my dad told me early in my career is no one cares what you think about the Fed, especially the Fed. They're not polling you. So once they make their decision, the question is, how are you going to react to it? What are you going to do about it? Because, again, we can think they were right, wrong, or otherwise. It doesn't matter. They did what they did. So with that as a backdrop, does it change at all the way you're thinking about the markets, going into year end next year and beyond?
But before you hit the market side, just as it ties a little more towards rates, and you hit Main Street and our clients, and maybe Patrick more directly than me, when do you refinance your mortgage?
Fair topic too.
It's a good question. I mean, I guess the good thing and the bad thing is, like, mortgage rates have not moved a bunch just because the Fed cut their short-term, their current rate, which is more on the short-term end of things, just for those who are keeping track of what the Fed's doing and how it impacts things. But mortgage rates more specifically have moved lower in anticipation of this new cycle of rate cuts, a couple months ago. So they're still kind of high. It'll be interesting to see where markets go from here, because I think the three of us on this call probably agree that bond markets and the 10-year yields have kind of dropped maybe too far too fast, which is really what's going to dictate where mortgage refinances occur. So I don't know. I mean, selfishly, I'm hopeful that they keep cutting and the whole curve just comes down a little lower.
But I think you have to wait. I think you'd wait. I think a lot of these banks are going to try to capitalize and undercut others and say, hey, we'll do it here, we'll do it there. We'll do it with no fees. The banks that have your mortgage already are going to reach out, like Matt, they did.
Yeah, what do they call that? Recasting?
Well, no, recasting is different. But maybe
there was something that they, like a buy down type deal.
Effectively, they just say, "Hey, stay with us. Don't refinance and take your mortgage elsewhere. We're just going to lower your rate and just sit in your seat and stay happy and don't leave." So that'll probably happen again.
Yeah, and I think just to put a bow on the market stuff, Pat, I think it was you that said a couple of minutes ago that there was a lot of pricing in advance of this, and you're right. From our market opinion, I think we are less. We could be right, wrong, or otherwise, but I think we are less clear on what we think equities are going to do out of this for the next year and so on. And the election and taxes may play a role in that as well. And obviously earnings always drive the bus with equities. But on the rate side, long rates, in my opinion, and you alluded to this, Pat, came down too far too fast. And I don't necessarily think that you have to go way higher, but I don't see why if we're not going into recession, I don't see why rates need to be way lower than they are. Now, mortgages could eventually catch up a little bit to where treasuries are, and you might see a little relief there. But I think the days of zero interest rates are over and will be over for quite some time. And I think we're just going to kind of settle in here. And those that, put on really high duration, aggressive bond trades a couple months ago, congrats, it worked for a couple months, but I'm skeptical that will continue to work.
Yeah, until our next crisis, right? Until the thing that none of us see coming occurs, which will inevitably happen, and then we potentially lower rates. Who knows, right?
Like, how many bets do you think are on for higher rates next year? For rates to go up. Someone's going to make some money on that eventually. Right. I don't know. Everyone can't be right. at the same time.
Yeah, well, I certainly have heard people starting to take out more inflation hedges in portfolios, figuring maybe rates don't go higher, but the Fed takes their eye off the ball on the inflation side. That feels maybe a little too cute and premature, but it's not crazy.
Yeah. For what
speaking
it's worth,
go ahead, Pat.
All I was going to say is pat myself on the back so that I later have egg on my face later this year, hopefully. Is in the predictions game from, if I'm remembering correctly, from our kickoff episode this year. I'm doing in the words of Larry David, pretty good on my rate reduction and market predictions. Which I'm now that I'm saying this, tomorrow we'll have a Black Swan event, or Saturday, but
right. Here comes the bear market. Way to go!
Here comes the bear market, and or inflation comes back and rates go back high. Okay, I'll probably get it wrong, but we'll see.
So speaking of year end and next year, there are some tax ramifications from the election, and then maybe some Q4 financial planning things. Pat, you want to lead us off there and some things that we're looking at there?
Yeah, I think, when we were texting about things to talk about on this podcast, obviously the Fed markets is kind of the biggest one. But I find really as soon as Labor Day hits, I don't know about you guys, but it's like Labor Day and then it's like January 1st. Like the rest of the year just rips by. You got holidays, you got things going on. People are busy trying to finish stuff with work. So like you're just busy with stuff. And our job obviously is to keep people focused on things that are going to amplify their financial life and help their outcomes and all that kind of stuff. So in that vein, I think there's a couple of things that I would just like hammer home. Is number one is benefits enrollment across the board. So like if you're working for a company or you're retired, Medicare benefit enrollment for 2025 is coming up, healthcare enrollments. But if you're a corporate employee and you've got your benefits enrollment, don't glaze over it, right? And I'm not just talking about health stuff. Aaron, feel free to jump in here. Like you're going to have deferred compensation decisions. That stuff is really important to make sure you get right. You're going to have tax potential decisions around what you're going to do. All that stuff are things that we try to help consult people on. And I think from that piece, those are some important pieces if we want to hit on. And then also sort of on a more theoretical topic is, without getting political around the election, we've got some, tax-related planning considerations that are on the horizon. So those are kind of the two big ones. Like I said, Aaron, I don't know if you have some stuff on, benefits enrollments and stuff that you think will up around this time of the year.
The deferred compensation piece, 401k, any sort of corporate benefit where you're able to potentially reduce taxes. Oh, it all sounds great. And a lot of times it is, but there are some big repercussions if you do not get it right.
Yeah.
We've talked about this before, but big tax bills that are unexpected down the road. And it is easy, as the word you said, glaze over, because who wants to look at that stuff, right? You're busy with everything else in the world. What do it's just one more thing to look at while you're busy with work and family and everything. But it goes a long way. Think about your future. Like 5 years down the road, when you get handed that giant tax bill, you're really not happy then. So take the 10 minutes, talk to us, have the conversation. Don't just kick the can down the road, because the can might not go where you want it to go.
Yeah. Yeah. I mean, you just like read my mind. Like you and I, all three of us, I'm sure, have had those conversations where talking to a client mid-year and they're like, oh yeah, I have this like huge deferred compensation payout coming on later this year, early January. Like, wait, what? Like, why didn't you tell me about that? Why didn't we look through it? And they're like, oh, I made the election last year. I had no idea. It's like, what? Come on. Like, this is stuff that you have an expert to be able to help you figure out. Like, yeah, to your point, you're busy. Take 15 minutes, get it right. After tax 401k stuff, things like that. Those are all really
that's a big one. Yeah.
Tax planning strategies to take advantage before the end of the year. So just get it right. Like you get an email from your company, forward it to Amplius, talk to us. We'll help you figure it out.
Well said.
I have nothing to add there. It's good advice. And look, I don't want to go too far into taxes and election politics, because it's getting to be kind of a toxic topic, and B, we're going to have more episodes on those topics as we get closer. But just from a purely clinical standpoint, it is entirely possible that the tax picture in this country changes meaningfully, let's say by 2026. Could it be 2025, or could it be after the expiration of the 2017 bill at the end of 2025 that rolls into 26? That could have a meaningful impact on people's on corporations, individuals, estate planning, and ultimately the markets. So stay tuned there. But my guess is we'll have some more content as we roll into further into election season here.
Yeah, I mean, I'll steal one of your lines, Matt, that you said 100 times on calls I've been on with you, where the general consensus, again, being apolitical, is not that tax rates are going lower, right? And that seems even more true now, because, again, whoever's in office potentially next year is going to have to spend, political currency on new legislation if they're going to pass new legislation, whereas they don't have to do anything for tax rates to just simply go higher, which might end up being like a pretty significant chance of happening. And that, like you said, Matt, that's going to affect individuals on a federal basis, likely a state basis with how some of these rules will change, estates and gift taxing rules to a very significant effect. And obviously corporate rates, which could have a huge effect on markets that I think all of us are kind of thinking the market is discounting at the moment. So yeah, they're all things. I think, Aaron, I don't know if you've got stuff to add here too, but like, the old stuff we've talked about on this podcast a million times of if we think we're in a lower rate tax environment right now, don't wait, across personal financial planning, estate planning.
It's the Roth conversion conversation all over again. It stinks in the moment to voluntarily pay taxes on that IRA to Roth conversion, but it stinks more potentially if you don't do it. So it's like kicking the can down the road. Don't not do something now because, it's just easy to gloss over it if it's really going to, lead to a big tax bill down the road.
Right. And to Brad's point there, crystal balls are not clear, but chances are, I never say never. It's hard to conceive of a scenario where taxes all of a sudden get meaningfully lower. I know Trump has talked about that, but he would need to both win decisively enough to get both houses of Congress, and they'd still probably have trouble passing that.
Right.
The path to least resistance is higher simply because those previous cuts expire at the end of next year if they do nothing. So definitely something to keep an eye on. So we're shifting now, Aaron. Are we going to food or headline?
Oh yeah. So we're shifting and shifting. So we're shifting into food, but because I didn't have a hoagie in my back pocket in the last 2 weeks to review, we are shifting to Matt Liebman for some cheesesteak commentary.
So, well, thank you. It's my Dave Portnoy moment here. So I had family in last weekend from the Chicago area, and they've been coming in their whole lives. They've always, most of their extended family lives in the Philly area, so they're no stranger to the cheesesteak. But when they come in, it gets a little gluttonous and excessive. So they were here for less than 72 hours. Father and son, let's say roughly 60 and 30 in age. And my guess is in 3 days, they had between the two of them, maybe 8 steaks, maybe 6. Maybe they just had one each day, but it was a lot. I thankfully did not partake a ton. But they went to the usual suspects. So they both, and the father of my cousin, said he has nostalgic connection to going to Pat's, even though he wouldn't say it's the best cheesesteak he's ever had. It's just sort of the standard, and he said it met expectations. But then it was interesting. So on Friday, they were driving. They would play golf, and they were driving over to Noah, my son's soccer game. And on their route, they asked me where they could go to get a cheesesteak. And so I sent them to D'Alessandro's because it was sort of on their route. However, they were closed, family vacation or something. And I said that I was going to, so I said, go across the street to Chubby's, but they didn't want to do that. So they came back to my neighborhood and had Mama's cheesesteaks, which I always forget is there. Mama's Pizza, which has cheesesteaks, which they said was excellent. And then to complete the circle of the non-traditional cheesesteak, Noah, my son, is a big fan of a suburban cheesesteak out by me in Bryn Mawr called Bubbas. And we got that for them on Saturday, and strong reviews all around. Everybody really liked Bubbas. So that is my entry into the. I only had Bubbas out of the three, so that's the only one I can rate. I feel bad passing on other people's ratings, but I would say Bubbas gets a solid like 8.0. It's a good steak.
That's a very legit review.
Yeah.
We don't. It's so infrequent that I have cheesesteaks. Just being in Philadelphia, it's like everyone would think we, eat them for breakfast, lunch, and dinner. But it's once in a while. It's when friends come in from out of town. My son loves them. We have a great place right by us that is really blown up in the cheesesteak world. But I'll review that one another time. But it is a treat.
Yeah, we try not to have them a ton. Allison was actually saying she had more when we lived in New York and would come into Philly and visit, go out with friends, be out late night, and maybe wind up at Pat's at the end of the night than she ever has since we moved here.
Yeah, I think that's what happens, right? Because like you don't realize how good you have it until you're gone, kind of thing. Which I will say, like this time of the year, I've mentioned a couple of times. I'm now in New Jersey, northern New Jersey. I was in Fishtown for 4 years before this. And it was this time of the year where I probably was at my highest point of cheesesteak consumption typically when I was in Philly. Because like my routine would be Sunday morning, get up, do whatever I need to do, and then settle in for football. And I'd usually go get Joe's Cheesesteaks, which is right on the corner in Fishtown, Frankfurt and Girard. Great cheesesteak spot, kind of run of the mill, but definitely on the upper echelon, like a high tier cheesesteak. And I'm already missing them, but I'm anticipating in the coming weeks as the weather continues to cool and I'm settling in for my Sunday rituals here, I'm going to be like, man, missing a cheesesteak. Like, I'm going to be getting nostalgic. Yeah, missing Joe's.
Good stuff. Good stuff, guys. All right. On to some headlines, if you don't mind.
Sure. We'll do headlines and then we'll finish it up.
Nothing hard hitting this week. Some light ones. The headline's not amazing, but just the story from last night. Shohei Ohtani.
Oh,
Pat, are you aware? All right, so good. And you are aware.
Yep.
So headline is, did Shohei Ohtani just have the greatest game of all time? So I already know he was approaching 50-50, 50 home runs, 50 stolen bases, would be the first player ever. Meanwhile, there's other players. Bobby Witt Jr. is doing 30-30 for a shortstop, which has never happened, but just completely overshadowed by Ohtani. So the Dodger slugger became the first player in MLB history to reach the 50-50 club after a mind-blowing display in which he went 6 for 6 with 3 home runs, 10 RBIs, and 2 steals. I mean, crazy.
I had no idea early in his career that he was this fast and like good on the bases. I knew he could hit, and then learned he could hit for power, and obviously the pitching was incredible. But the guy's a phenom. I almost feel like he doesn't get enough attention.
Superhuman.
Yeah,
in the baseball world, at least.
Yeah, it's amazing. He's on the short list of like greatest athletes of the modern generation, right? Like he's
has to be.
And most dominant, because I always love that conversation across sports of like who is the pound for pound most dominant athlete in their sport. Like I love those like Tiger Woods versus Michael Jordan kind of things, and he's there now, right? Like I mean these are insane numbers that he put up, and I read the whole thing and watched a bunch of highlights this morning. Just cool.
I do agree, though, Matt. It's almost like he doesn't get enough, not talked about enough. And I don't know if it's because we're on the East Coast, he's on the West Coast. But
it might also be a language barrier, too. Like, I feel like he doesn't have that many quotes. He's not American, you know.
Yeah.
And, you know, I don't hear him speak a lot, but it's amazing.
It is. All right. I had one lined up about interest rates, but we hammered that one.
I'll just say real quick, maybe we should do a segment at some point on the podcast in the future of let's dissect that greatest athlete of most dominant athlete of their sport, because that's a fun one.
Put it on the list.
For sure. And by the way, while we're just on Ohtani for a minute, Pat, as our resident conspiracy theorist, that gambling scandal went away quite quickly and now all of a sudden he's having this historic year. Just saying, it smells a little fishy. I don't know.
A little fishy. Yeah, a little fishy.
Yeah.
Goodbye that.
All right. Another one in the sports world, I think more geared towards Matt, but Patrick, you'll give some input here too. First part of the news was, I think, from yesterday, and then the second is from 2 hours ago. Matt, Patrick, what are you more excited about? We'll frame it that way. Part one, Sixers officially building their stadium in Philadelphia, downtown.
Yep.
2, just from an hour or 2 ago, Joel Embiid and Sixers reach a 3-year, $193 million extension. So both Sixers. What do you think?
Wow. So first of all, I think Joel Embiid, you should call us. You need an update on your financial plan. You need some amplification. Let's have a conversation, Joel. I think he lives somewhere out not too far.
I'm sure he does. Yeah.
Yeah. So, maybe I'll just go knock on the door. I'm sure it's that easy. So anyway, no, look, I'm happy that he seems to be staying here. Like an NBA contract is never set in stone. If he wants a trade, he'll get a trade at some point. But they do have a very exciting season ahead of them, I hope. Would love to see one healthy, full playoff run from him. And the more years he's here, the more likely you get more opportunities for that. And as far as the arena in Center City, I think it's cool. Like I think when I lived in town, I would have enjoyed that more when I could walk to the games. But thinking of a lot of people that do live in the city, I think that'll be really cool. Parking is already such a nightmare in Philly that I have no idea what's going to happen here. But I imagine when going to the new stadium one day, I'll be taking the train in because it sounds like parking will be a nightmare. But yeah, I think it's cool to have a Center City arena.
Remind me again, are the other tenants joining them again? Like, are the Flyers in your plan? They're staying in Wells Fargo.
Sixers only, somewhere near like Market East or Chinatown, right? Over in that area.
Didn't they want the Flyers coming with? But I don't know if that's a done deal. It's certainly not a done deal, but is it still on the table? I don't know.
Yeah, I don't know.
Yeah, I don't know either. It's just on that topic, for what it's worth, as a person who didn't grow up in Philly but then lived there for a really long time, I always thought one of the coolest things about Philadelphia was the fact that all the sports arenas were all next to each other in South Philly. So you're losing that a little bit. At the same time, I do agree there's a bunch of cool upside about having a city, especially east of Market, which has seemingly for a long time needed like a revitalization they've had some failed efforts on that side of the city. So like it could be really cool. I'm hopeful that it is. On the Embiid thing, as the one of the three of us who pays attention to the NBA the least, is that sort of like the 6-year deal? Is that a little out of the norm? Don't all the superstars just sign like these 1-year deals and then get like insurance and hit like max contracts every year? Or is that just LeBron, or like what's the deal there?
That's a mix. More of them sign these long-term deals and extension. LeBron sort of popularized the 1-and-1 where he would sign for 1 year with a 1-year player option. So he could always sort of have the leverage, of the upcoming free agency, and because he's like superhuman and never gets injured, so he doesn't have to worry about that. But it's not that out of the norm. But it is a lot of money. It's a lot of dough, and hopefully he will live up to it over the life of that.
Yeah, hopefully. Right.
Last one out of left field here. This one made me laugh. Hope I don't offend anybody. Chechen warlord says that Elon Musk remotely disabled his militarized Cybertruck.
Wow, I missed that.
So this guy, warlord, has a big machine gun mounted on the back. And so he says Elon Musk is behaving badly and he's not being manly. And he remotely disabled my Cybertruck. How could you do that, Elon? In quote.
Was that a tweet? Was that on X or an X?
That's a good question. I don't know where he said this. It was a post on Telegram.
Telegram was the one where the guy got arrested, right?
Yeah. So it's like this warlord. I see this guy like stomping and like, you disabled my vehicle. That's Elon. Come on. Yeah.
And how do warlords have like Twitter accounts and like it's just like wild world we live in.
It is quite wild. I don't know if I have an opinion on that outside of just a laugh, but
Pat, just curious while we're on the topic, do you like the Tesla Cybertrucks? I know you're a car guy.
So they're polarizing, that's for sure.
They are.
I think, look, Elon Musk's a polarizing guy. I think, at first glance, are they weird looking and ugly? Yeah, but they're going to be like a total like status car. Like everyone in LA is going to have them and whatever. Love would be a strong word. Here's what I like about them, and here's what I kind of like about Elon, without hopefully upsetting people, is a lot of his Tesla cars and designs have been straight up because like that's what he likes. He's talked about it before. Like he called the Model S plaid because he's like that's funny. It's like fast, ha ha ha. Like he's done all these things. He made the Cybertruck from something I heard about him bulletproof because he's like, well, why not? Like if I was designing like a video game era like tank type car, I would have bulletproof everything. So I made it bulletproof. Like that's his rationale, which is kind of hilarious in a world that's like very serious and buttoned up. So I think that part of it is kind of cool. I probably, for the price tag, I'd probably go buy a Porsche or something else like way cooler in my opinion. But that's your thing. I'm not a hater like some people. Some people are like, "Oh God, it's the ugliest thing I've ever seen." I'm not in that boat, but
yeah, I'm not a car guy, but there are a lot of haters. I do have driven a few Teslas. I think it looks cool. I mean, a lot of people really don't like it. I can't necessarily. I wouldn't anticipate that I'll be rolling into the office in one anytime. But like when I see them, I'm like, those are kind of interesting looking. I think Jason Kelsey drives one around.
That kind of fits.
Yeah, right, exactly. That tracks. So before we get going here, anything you're reading, watching, listening to, and anything over the last month caught your attention?
Patrick, do you have anything?
So I need to get back onto a reading grind a little bit. I need some books to get after. I will say, as I probably mentioned last year around this time, I love the Halloween months, the scary movies, all the stuff that comes out with like scary and horror genre. So there was a show that came out on HBO. It's a little gory. It's called like The Real Murders of Elm Street. So Elm Street's big from like the Freddy Krueger movies and Nightmare on Elm Street. And it's kind of eerie. It tracks all these real life murders that have occurred on Elm Streets in the United States. So it's like a little like nuts in terms of like these gross murders, but it's got me into like the Halloween mood a little bit, and it's good. I would recommend it if you're into that kind of true crime stuff.
Cool. You watched the first episode of this. This is called The Perfect Couple, the one with Nicole Kidman. So I just started that. I'm sure I'll have more feedback later. Matt, you're nodding your head. Maybe you've seen it.
Yeah. It's
I don't have much feedback yet.
It's fine. It's entertaining. It's sort of what I'll call the trite genre that I feel like a lot of Nicole Kidman stuff falls into. It's like, ooh, look at us. We're like rich. We're good looking. But we're still crazy, like, and I feel like that's like, but it was entertaining. I guess we're tied now 1-1. I mentioned earlier this summer that we watched Presumed Innocent with Jake Gyllenhaal, and I predicted the ending on the Perfect Couple one. Allison predicted the ending, and I didn't see it coming. So we are tied in our household on that one.
Very cool. I'll be there soon.
All right. Well, that is it for the 25th episode of the Wealth Amplifier podcast. We have some more good content coming your way before year end, and see you later, guys.
See you guys. Good episode.